Hi, my friends. We are live at 5, and today we are going to discuss what it takes, or what, how does it, how does a credit pull affect your credit score? So, when you're, so th- there's actually a lot to that question. Um, when you pull a credit report from a lender, and lender pulls your credit report, they pull what's called a hard inquiry, not a soft inquiry. I'm going to get back to that here in a second. So a hard inquiry will affect your credit score, but it's only about 5 points. So it's not a big factor unless you're like right on the edge of qualifying or not qualifying. Then 5 points may be a big thing. So it does affect your credit score, but there's exceptions to that rule. So I'm gonna come back to that in a minute. So I talked about a hard inquiry and a soft inquiry, and the difference between a hard inquiry and a soft inquiry on pulling a credit report is a hard inquiry will affect your credit score. That is somebody that, like a mortgage lender, is pulling your credit, a credit card, a car dealership. So when you're buying something, that's called a hard inquiry. Now, a soft inquiry is something, if you go pull your own credit and you go look at your own credit, it doesn't affect your credit score. There's also people like insurance companies or credit cards. This is different than a credit card where you applied for a credit card. So if you get those in the mail, if you get those offers for credit, they have probably pulled what's called a soft inquiry, so that they know that, and they don't get a credit score. They just know that you fit a specific profile. That's a soft inquiry. You probably would never know that it was even pulled. So that does not affect your credit score. And so the exception to having a lender pull your credit where it doesn't affect your credit score is if you have about a 45-day window. So let's say you're going to go buy a home and you're going to look at several different houses or several different lenders. You want to kind of shop around. And so you have all 3 lenders pull your credit report. That's not going to affect your score except for the first one that pulls it. You have a 45-day window, like, big 45-day window in which you can pull credit, and the credit algorithms know that, oh, they're shopping for a home. Doesn't mean I'm going to go buy 2 or 3 or 4 homes. It just means that they're going to buy a home. Yeah, you're going to buy a home. And so that doesn't affect your credit score other than the first one. So that all 4 of those, or all 3 of those, are going to have the same credit score. So you have a window in which to shop. So that's the exception on pulling credit and not having it not affect your credit score. That works only with a mortgage and buying a car. So the cars and mortgages have that exception. So if you go and apply for 2 or 3 credit cards, those are going to be all credit inquiries, hard inquiries, and they're all going to affect your credit score. Now, like I said, it's about 5 points, give or take a few points. So it's not a real big thing. And credit scores. Oh, and when we pull credit scores, that can affect your interest rate. So there's lots of things that can affect your interest rate. And one of them is your credit score. So if you, and it also can vary between conventional FHA financing. If you have questions about that, call me. So let's just say the higher your credit score, the better category you're going to be in, and the better credit, or the better interest rate you're going to get. Hopefully that all makes a little bit of sense here. So that's a little bit about credit, and I'm going to check and see if we have any questions. So I'm going to invite Butch to come on here. Butch, do we have any questions from anybody at this point?
Hi, Ron. So there's a few questions here. And one is, how does pulling credit affect your score?
Yeah, I just went over that. So we
I
just
see.
we just went over that. We just went over that one.
So we have another one here. How
But I can
multiple?
go over it again. So
Sure.
basically, pulling credit will affect your score about 5 points.
Mm,
Now, if there's a difference between that hard pull and the soft pull, and so we just went over that just a minute ago. So there's some exceptions to that.
sure. All right. How multiple lenders can look at your credit without dropping your score?
Yeah, we just went to that. Just went over that as well.
All right. All right. So here are some other things here. I guess some of this are already covered. Can a lender look at the credit without it affecting your credit score? I think we've also run through this.
So say that one again.
Can a lender look at a credit without it affecting your credit score?
Yes. Now, so that's the exception that I just went over is if you have that 45-day window in which
Mhm.
to shop, and if you have multiple lenders looking at your credit in a 45-day window, then you will not be affected. Only the first one. So the first one is what's called a hard inquiry. The rest of them, they're all hard inquiries, but the algorithms know in the credit bureaus that that you're shopping for a house. So it doesn't mean you're going to buy 2 or 3 houses. It just means you're shopping lenders. You're going to buy a house. So they don't not dock your score down each time, as long as you're within that 45-day window.
Yeah, I guess we have like last 3 questions here. Um, and I think we have already run through some of them, but let me pull that one. Is there a time when it's too early to get approved?
No. So good. That's a great question. Um, so we're talking about credit, and it's not. There's no early. It's never too early to look at your credit and to get pre-approved. And the reason why is because if there's any issues at all, then as long as you're giving us enough time to look at the credit, then we have enough time to help you solve any credit issues that may be on there. And if you haven't looked at your credit for a while, who knows? Man, there could be some issues that you don't know about. And if we can get you to a higher credit score, then it's definitely worth having credit looked at sooner than later. And yes, we may have to update your credit. If you're 6 months away and we're pulling a credit now, yeah, we may have, and then you get a house under contract 6 months later, we may have to update your credit, but at least we know what we're going into and not just guessing. So the answer to that question is no. It's never too early to get into to get pre-approved.
That's awesome. I think we have also here. Why is my credit score different from? Okay, I think we covered this. Why
No,
is my credit score different from the credit score online?
okay. So so if you go to the free credit reports or anyway, any of those free credit reports, they use a completely different credit scoring system. So there's all kinds of there's probably 100 different credit scoring modules, and we in the mortgage industry use a specific credit scoring algorithm to look at credit. So, for example, if you're looking for a credit card, the credit cards want to know more how you're paying other credit cards or other revolving accounts, and where mortgages, where they're giving you way more money, they are more interested in how you're paying if you've had other mortgages or how you're paying other things. So they go in a lot deeper level than maybe some of the other ones do. Whereas some of the free credit scoring agencies use a simulated model or an outdated model. That's how they give it to you for free. So your credit scoring, I've seen them 50 to 100 points different between some of the free credit scores that you get online and what mortgages pull. So it's a great way to monitor your credit, but it's not a great way to say, hey, this is what my credit score is, because as we pull it in the mortgage industry, we're probably going to come up with a different credit score than what you're looking at. So there's just credit scoring models, lots of different credit scoring models. And if you're not pulling a mortgage model, then your credit score will be a little different. Is there any other questions, Butch?
I think we have like two last questions here, and I guess the other one is, what are the ranges of credit score? Like ranges?
Oh yeah, so they have so in the FICO model, you're ranging from about 350 to about 850. Obviously, the higher your score, the better your score is, and in order to get a mortgage, you need to be on an FHA loan. You probably need to be mid 500s. A conventional wants to be in the lower to mid 600s. And then as your credit score goes up along that scale, the better your interest rate is going to be. So, so usually somewhere around 350 to 850. It's almost impossible to get an 850 score. Although we do see credit scores in the 800s, it's almost impossible to get 850. But I have seen them in the lower 800 score. So if you have an 800 or upper 700 score, you're like in the top tier. Any other questions, Butch?
I think it's awesome. I think we have already covered this, but I'm just gonna throw this again. What is the difference between the soft and hard pull?
Okay, a soft and hot. Yeah, we did cover that, but we'll cover it again real quick. A soft pull and a hard pull. So a hard pull is when you are requesting, you're getting credit. You're asking for help in getting credit, whether that's a mortgage, whether that's a car, whether that's a credit card, whether that's anything. So a soft pull, and that affects your credit score, not by a lot, but it does affect your credit score. And a soft pull just means that it's not going to affect your credit score, and that's if you go pull your own credit report so that you can see what your credit score is, or if you get a credit card offer in the mail, they've probably pulled a soft pull just make sure that you fit their box to. But until you authorize a credit pull, it's going to be a soft pull. And also employment can sometimes be what's called a soft pull. And so it doesn't affect your credit report until you're actually requesting help with getting some type of financing or some kind of credit, like a credit card. Any others there, Butch?
Yeah, I guess we are all done with all the questions.
All
Ron.
done with
I think
questions.
if you have
All
something
right.
to add into it, yeah, we can add more.
Okay, sounds good. Thanks for watching us. And if you have questions on credit or any other mortgage question, feel free to give me a call. My number is right here on the screen, 801-628-7667. Thanks for watching.